This is the first update of the newest strategy from Amplify ETFs. The Amplify Emerging Markets FinTech ETF, symbol EMFQ. Joining me to discuss this strategy is Christian Magoon, the CEO of Amplify ETFs. Christian, let's get right into it. Why should someone consider investing in EMFQ?
Well, I think EMFQ provides a really interesting opportunity for investors, really a double-barreled opportunity. One, to get access to emerging markets. That's where 86% of the world's population resides, by the way. And two, own maybe one of the more promising sectors or industries in emerging markets, which is FinTech. I mean, if you're familiar with FinTech and see all the possibilities that FinTech brings to the table as we really transform from a cash-based world to a digital world, really the possibilities are endless. EMFQ provides a diversified portfolio by country in the emerging market segments, but also by financial tech application. So we're going to talk about that in a minute, from banking to digital wallets to insurance. A lot of interesting companies in one of the fastest growing regions or types of economies in the world, which are these emerging market populations. And the cherry on the sundae, if you will, Jay, is more people in emerging markets own smartphones than have bank accounts. And that's really the ultimate play here for FinTech companies in emerging markets.
So that's a great segue into a discussion around the overall objective and investment strategy behind EMFQ.
Yeah, so EMFQ, and think emerging market, FQ, financial technology for Q. EMFQ is an index-based ETF that's going to own companies in a variety of FinTech segments around the world when it comes to emerging markets. So you have exposure to Asia, Latin America, and other countries. Very diversified portfolio. Many of these names you're not going to recognize if you're a US-based investor, but if you've done any traveling or have any relatives in these emerging market areas, they'll certainly know these names, because some of these are really the backbone of kind of the digital finance world when it comes to emerging markets.
So let's get granular with that. Would you break down the sector exposure for EMFQ?
So let's look at the leading market segments that are represented in EMFQ. There's 7 of them. Really the largest, though, is payments at about 50% of the portfolio. These are the companies that are doing the payment processing, the payment interfaces, the backbone of the payment systems, again, all digitally in emerging markets. The next really largest 2 segments are banking, lending, and credit. There's a lot happening in terms of banking, lending, and credit in the emerging markets area. A lot of this is just happening via computer and smartphone, making the process more efficient. And then some of the other segments that are in the ETF include insurance, investment trading, digital asset wallets, and real estate. So quite a diversified portfolio when you look at the different segments, 7 of them. Payments really affect so many areas of commerce that they end up being half the portfolio. But as you can tell, payments are really the infrastructure for so many types of applications and industries. It makes sense that they have a fair amount of weight in this portfolio.
All right, now this is important for investors, Christian. Would you break down some of the top country exposure for investors in EMFQ?
Yeah, so when you look at the leading country allocations in EMFQ, you see exposure to Asia through a 24% weight in China, 8.3% weight in Hong Kong, an 8.3% weight in South Korea, Singapore at 5.5%, Indonesia at 5%. Many of these countries are digital first when it comes to finance. If you've gone to these countries, you pay for a lot of things through your smartphone. Makes a lot of sense. We also have some exposure to the Latin American side of things, including Brazil at about 14% of the portfolio, Uruguay as well. There's a mix of about 20% of the portfolio in a variety of smaller country positions. So this is a quite diverse portfolio with exposure to Asia, Latin America, and many of these other kind of unique one-off countries. Some of these stocks that are in the portfolio also may be listed in a developed country, but they actually do business in emerging market countries. So that's also an interesting distinction when you look at the country allocations. But in short, you're getting a highly diversified portfolio by market segment as well as countries here in the emerging market FinTech ETF.
So, Christian, where in a portfolio do you think EMFQ fits?
Well, we think there's a couple areas that EMFQ could fit nicely in. First, if you're a thematic investor, you may own actually some exposure to FinTech. FinTech has a lot of promise, but if you own one of the FinTech ETFs in the marketplace today, you realize they have little to no exposure to emerging markets. So EMFQ may be a great complement to FinTech. I like to say if you like your FinTech ETF, you should love the EMFQ FinTech ETF. Why is that? Because it's exposed 100% to the fastest growing area of the world, emerging markets, where more than 85% of the population lives. The demographics are superior in terms of the younger population that are adopting technology. There's a lot of growth there. We think evaluations are a little bit attractive now in emerging markets relative to developed markets. So number one, a complement to your existing FinTech ETF. Number two, this could be a complement to an existing financial allocation. So many portfolios have exposures to financials. Financials tend to be stodgier types of stocks. Emerging market FinTech could add a really nice piece of growth or alpha to that allocation and allow you to have some upside from these disruptive companies in disruptive markets. Traditional finance companies, they don't have as much exposure to emerging markets, number one, and they aren't as focused on disruptive technologies. So EMFQ could be a great addition to an existing financial allocation if you want to bump up that alpha and maybe hedge against some of the disruptions that are out there. Those are two areas we think make a lot of sense. Of course, if you're a growth investor, what better way to go out and harvest growth potential than look at emerging markets and try to harness the power of FinTech disrupting emerging markets where the majority of the population is unbanked and the majority of the population has smartphones, which that is a great combination for the promise of FinTech companies.
Christian, is there anything else that investors should know before investing in EMFQ?
Well, here's a heads up. If you're an impact investor, if you want to invest your money in companies that are having a positive impact on society, EMFQ might be something that you should take a look at. Why? Because of financial inclusion. We talked about how many in emerging markets are underbanked or unbanked. FinTech gives them an ability for the first time to access these types of businesses, whether it's banking, lending, credit, digital wallets, payment systems that they didn't have the ability to access before in the traditional banking system. That provides impact to many emerging market citizens who are growing in terms of their financial sophistication and wherewithal. So you are making, we believe, a positive impact by investing in EMFQ because FinTech in emerging markets is helping the unbanked, the underserved when it comes to financial services and forms of payment. So that's something to keep in mind for investors who, again, are seeking to make that extra impact, do well for those others that are in different markets, and also at the same time benefit from a portfolio standpoint, we think, over time.
To learn more about the Amplify Emerging Markets FinTech ETF, please visit EMFQETF.com. That is EMFQETF.com. And to learn more about the suite of funds available from Amplify ETFs, please visit AmplifyETFs.com.